Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And the news in the market today is that SEBI has put out a consultation paper on regulating retail bond platforms. INR Bonds is a retail bond platform through its Quick Invest app for retail investors and financial advisors alike through a curated list of bonds with information, transparency, and the easiest of in-app processes, investment processes. Download the app now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
INR bonds is SEBI. The reason why SEBI wants to regulate the platforms is what INR bonds is doing right now to make sure that investors get the right bonds for their risk profile, make all the settlements transparent through the exchanges, and make sure that there is no mis-selling of products and that investors get the benefit of the platforms, and that there is more and more retail participation in the Indian bond market. SEBI is suggesting that bond platforms get a broking license, a stock broking license, which gives them the regulatory authority to regulate the platforms. And like in equity, where platforms have really hit off with investors, the last 5-6 years, we have had platforms like Zerodha starting and then taking in a huge number of customers, and more platforms like that coming up, and then US equity platforms. So platforms are the way to go for investors in all asset classes, and retail investors will benefit from the SEBI regulation of bond platform. Let's in the market highlight, Gsec yields were down slightly, 7.41%. The equity markets rose. The rupee was steady. And in the corporate bond market, NABARD is issuing a 3-year bond at 7.25%. NABARD is the PSU and is a regulator and a regulatory bank, and hence it's a good level, 3-year at 7.25%. But this is only available for retail, for institutional investors, and with bond platforms being regulated, now more and more of such issuances will be available for retail investors. Thank you very much for listening in, and do not forget to attend our webinar on the 27th of July, Wednesday, 4 p.m. where we are going to talk about what are the bonds to avoid in this market. It's a highly risky market to invest in, and investors have to be very sure what bonds they are investing in for higher returns. And that's again one of the reasons why SEBI is regulating the markets, saying that very high yield bonds, the investors don't understand such bonds and are being attracted by yields. And typically what tends to happen is that such investments go sour. Thank you very much for listening in, and do not forget to subscribe to our YouTube channel if you have not done so already.